ScoreMe Solutions and Resurgent India presents virtual session on the rise of digital banking, trends and opportunities. Mr. Ashok Mittal, CEO Prest Loans. Ashok is a seasoned professional having a rich experience of more than 20 years in capital and commodities market, banking, financial services and foreign exchange. He has been a part of a Harvard Business School executive program called Managing and Transforming Professional Service Firms. Ashok is a gold medalist commerce graduate from MDS University, Rajasthan and has done Masters in Banking Management, MBM, and KEB.
Now, I'd like to invite Mr. Ashok Mittal. He's the CEO of Prest Loans and a seasoned professional having rich experience of more than 20 years in capital markets and commodity markets, and of course, foreign exchange as well. He's been a part of Harvard Business School executive program called Managing and Transforming Professional Service Firms. Ashok is a gold medalist, commerce graduate from MDS University, Rajasthan, and has done a master's in banking management and CAIB. He was the CEO of an agri-financing NBFC firm, Kisandhan Agri Financial Services. He's been part of MK, he's been a director at Carvi Forex. He's also been a part of Union Bank of India and UCO Bank. He's been awarded by eminent personalities like Mr. Pranab Mukherjee, Mr. Narendra Modi, and Mr. Amit Shah. And he's, of course, very, very passionate about setting up and expanding businesses from scratch. So very delighted to have you, sir, today. And would love to hear about your views on the competition landscape that's evolving amongst traditional banks and the fintech disruptors. You know, we keep hearing about this contest and collaboration between fintechs and banks. So would love to hear your views on that, sir.
Thank you very much. And I would really like to appreciate and say my thanks to ScoreMe and Resurgent. The topic of this program is really very, very important nowadays. We at Prest Loans actually do small ticket MSME loans, especially in tier 3, tier 4 towns. And we collaborate with a lot of lenders where we need to provide them data the way they want. And most of the financial institutions who are larger in size, they prefer that they get data in digital format in a specific style and design, properly analyzed, etc. Whereas we service to the customers where they do not have too much of digital footprint, they do not have, let's say, banking or GST where you can directly fetch the data. So what we do, we analyze the data, assess it, and then provide to the lenders in terms of style and manner so that they can take the credit decision faster and better. Especially in a lot of areas where complete digitalization is not possible, especially, let's say, in case of properties or a loan against any kind of property, then you have some kind of physical aspect also involved. So the way it looks in metros or bigger towns or for personal loans, etc., the life of a really micro MSME is very different. Their understanding is very, very different. One point before I talk about how the physical banks work and how fintech is working, we need to educate people, especially in our segment. Like you said about responsible lending, I also teach people responsible borrowing, because they need to be really very careful. When you borrow money, you need to repay it. And actually this example which we are given, even if you borrow 500 rupees, you need to be very careful that you need to pay it back so that your credit bureau report is clean and you get a better score. That will make you eligible for a higher amount or a bigger amount, or the loan which you really, really need. You don't really need a loan for mobile phone purchase, right? You need a loan for business. You need loan for home. So avoid those smaller loans where some delay or default may cause bigger damage to your credit bureau history than a short-term advantage of taking some kind of loan. And please remember, these loans, small ticket loans, are very expensive as far as repayment is concerned. Now, since incidentally I have the exposure of working with two PSU banks, UCO Bank and Union Bank of India, where everything is run through traditional method, whereas now at Prest Loan it is everything about tech. So I really understand how it works and which are the challenges we have. Despite of lot of digitalization happening in larger banks also, still you keep struggling in terms of any kind of integration to be done with them. So while I do not have a technical background, I have learned one word called API. This is the most difficult and challenging aspect when you try to integrate any system with another organization. So it takes maybe days, weeks, months, sometime, and sometime you're not able to do. So the biggest challenge comes when you try to become a bridge. Let's say if I'm sourcing loans and I'm trying to provide information to the lender digitally in a method the way they want. So if it is a old bank, let us say, especially PSU bank, then this integration part becomes really difficult. And handling multiple lenders with multiple data formats and design and style is far more difficult. However, I should say that the good part is now traditional banks are looking forward to become more tech savvy to try and get the information the way we do. So again, to repeat, when we do customer assessment, it is purely assessment where you do not have too much data available. Then how do you really analyze that data, which is non-financial data, and then take a decision based on that data? So somewhere we have seen that change happening in traditional banks and trying to evaluate the customer based on alternate data or maybe future cash flows. And then if a fintech or a new age technology NBFC company or fintech provides them that information, and if they understand, then they are able to provide credit lines to the customer through the entity. So in a way, we are able to establish that if you do not have bank statement, if you do not have GST, if you do not have ITR, still you can analyze that customer. You can still analyze that the customer is credit worthy, and you can provide some kind of financial assistance or loan to those customers. And I can safely say that since we are doing it, so the acceptability of a larger institution who has been lending by traditional method has increased. Though the speed of this acceptance might be slightly slower because the hierarchy level of old banks is slightly different. It takes time to convince them that this method is a proven method, and the NPAs on these methods are far lower than what traditional banks would have done the way they have been analyzing it. So alternate data has got some kind of importance, and this is being recognized. So it's a slow path, but I think we are on the right path, and we have seen how the integration is gradually happening.
Mr. Ashok, just wanted to hear your views on the customer data privacy concerns and how they can be addressed via the digital banking ecosystem.
Okay, so I think Sumit would have been the right person for this, but let me share something which will allow him to talk more on the data privacy.
I'll follow your steps, sir. I'll share more, sir.
So I think the important point is that how the data is being shared, right? And whether the data being shared is live basis, delayed, absolute, obsolete, how it is working in the whole. People say data sharing, but I think people themselves are more than willing to share the data. There was a time when, especially when we were in the lending space, you ask someone to install the app, people will install the app, then they will give all consent, everything. And I remember around 4 years back, somebody told me and say, we have built this system which you should take for your NBFC company. Here we also get their all call track record, call log, SMS reading, etc., etc., etc. I was wondering how it is possible, right? It is only because the customer himself is giving his consent for all those things. So I always say that while there are regulations, it is always important to be self-aware what I want to share and what I do not want to share, what is actually not required by the lender also to get that particular information. I would like to talk about two regulators where data sharing, information flow is still not to the extent where we would want to have as a lender. Let us say credit bureau agencies. Now, the problem is that number one, this data is not on live basis. So all the bureau reports that you fetch, they are old, maybe delayed by 1 month, maybe 2-3 months sometimes. And incidentally, you do not get the same data from all the bureau agency, right? If you fetch 4 reports, from 4 credit bureaus, someone is showing this loan, somebody is not showing the loan. So when the regulation is that every lender has to submit data to all the 4 bureaus, they should be identical in always, except the fact that some analysis might be little different. Second, on the credit bureau itself is, I do not know if any one of you or any of the audience who is on the here, they have experienced. If you apply for a loan, especially for a larger amount of loan, how is it possible that somebody else gets to know that you have applied for a loan? So why, if I have applied through one particular bank, why a bank B, C, or D is getting to know that I applied for a loan, and then they call you that you have applied for a loan? So somewhere that data breach, or maybe it is happening somewhere, which I have a lot of concern. Similarly, when we as a lending institution look at lending, and when we try to look at rating agencies, again, they do rating based on historical data, historical performance. And somehow, if you see in last 4 or 5 years, the top rated corporates or companies somehow have kind of defaulted, and all that downgrading happens after the event has occurred. So it has to be a little more prospective. Now, I'm not blaming these agencies. I'm trying to say that the analysis of data by them, when you look at the historical data, we should be able to have some predictive analysis in terms of how this customer's behavior might be, can be, based on certain parameters or numbers, etc. Thirdly, in which is going to be future, and where again I will think the other panelists would throw some light, is in the book which I written, the FinTech Entrepreneur Journey, is that there are 3 V's which I feel are going to define how fintechs will work. And when these 3 V's work, then how you will analyze the data. So today the data is on text format, in Excel format, and you are able to analyze. My sense is a lot of things are going to move towards one V is voice. So my sense is that you will be able to analyze a lot of things based on voice. I think this was said also in between in a smaller way, but and I had seen one large bank was doing some analysis that we can go to ATM, give our voice command, and we can withdraw the cash. So somewhere a lot of work is happening on voice. So how much AI can be used to manipulate your voice and then try to use it? But my sense is people will move away from writing, from text, from SMS or anything. They will go away. So everything will move to voice. Second thing is maybe videos. So the way we are currently doing conversation. So a lot more financial transactions will move on the video. So maybe you can just do the entire loan transaction or entire lending or banking transactions using the videos. The video part which is being used currently is very, very minimal. Third, where the scope of doing financial inclusion, you have inclusive fintech, is on, I will say, vernacular. A country like India, where you have a lot of voices, lot of languages being spoken, understood. So the English alone may not be sufficient, Hindi alone may not be sufficient. So the entire ecosystem currently, I think, using the tech, largely it's on English based, but can I have my loan agreement in the vernacular language which I can speak or explain, right? So how much data can be used, and whether the moment, and I am quite sure that fintech will move towards it, then how the data protection bills or laws will work on this, let us say, because lot many things are not really covered properly. One live case example I would like to mention in terms of regulation, laws, and understanding of the concept. Like he mentioned, go to Google Office and get your money back. Similar to that, now we use NACH, right? Or e-NACH, right? E-mandate for collecting the EMIs. Now, the judiciary system is such that they are habitual of getting a bounced check back. So if the customer is defaulted, you have a check which is bounced, there is a check written memo attached to that, there is a stamp in it, and then you can file a case under section 138, right? Now, if your e-NACH bounces, you have nothing in your hands, right? It has just bounced. Your physical NACH is not there, and even if it is there, it has been deposited to the bank. So you will have to go to the court and say his e-NACH mandate has bounced. Now, how the court or judiciary system will take into it, unless they really know that the new technology has come in place, and the law has to really keep up with them in terms of understanding that 138 should apply to this particular thing also, and this may not be physically present to you, right, to show to the court that okay, this is how it is. Similar way, there are lot many other things. Let's say digital signature, for example. So if I do e-signature, digital signature, how the interpretation of those signatures would be done in the court, in the law court. One more aspect from lending perspective, there are a lot of, I will say, pain points in the fintech world, which we are talking right now, especially to your subject, which is digital banking, right? Digital banking or digital lending. So nowadays there are some, I will say, e-courts or digital intermediation system, right? ODS system, where you can do a lot of intermediation or arbitration through some digital platforms, right? My understanding is a lot of judiciaries, courts, judges, they do not really understand that system. So you need to really explain to them a lot in terms of how this digital system is working. So while my only little bit of a hunch is that while there is this data bill, data protection bill, lot of rules related to IT with reference to technology, I feel they are not really updated on regular basis. So we need to really understand that the innovation which is happening in this space is very, very fast, and the law need to keep some kind of pace with it. So then only your real digital banking or financial inclusion using technology would happen in real sense. This is what I feel, and I think there's a lot more scope. Some of the points which I mentioned in terms of what will happen in future is the digital lending space. Thank you.
Ashok sir, concluding thoughts from your end, sir.
I think before concluding, I must thank you because you have raised very, very strong, valid questions to all of us and made us think a lot before answering. Well managed and organized question answers. Conclusion, I guess the topic is digital banking, right? So while we spoke a lot about digital, so it is digital banking, digital lending, digital borrowing, digital depositing, digital locker, digital checks, digital ACH presentation. So when we look at the various aspects, services being offered by banking, means I'm assuming banking means financial institutions, which includes NBFCs like us. So there is huge scope for future, because I think we have reached just at this is not the end, this is just the beginning of digital banking in India. So a lot more things are going to happen. This effectively also means a lot of challenges are going to be there, and this also means a lot of opportunities being there. So digital is the future, and I see a lot of opportunities. Staying positive on this, despite of all those hiccups, challenges, problems, but I think the future looks very, very good. When we look at including those tier 3, tier 4 town people in the JAM, or you call financial inclusion, I guess the scope is huge. So we are yet to really witness the humongous growth in digital banking in India. Thank you.